In class 11, today we are going to do the revision of MCQs of final account, and in that chapter I will tell you how the questions can be formed in MCQ form in multiple choice. So today in accounts, we will practice MCQs of final accounts. MCQs of final accounts, one by one. I am going to show you different questions. Then you will be able to find out the answer. See, this is the revision of this chapter. How the questions can be formed in multiple choice questions, objective questions, fill in the blank, true, false, all the practice we will do in this video. So one by one, please see. First question, gross profit is. Gross profit is. See the screen, then you can find out the 4 choices. You will be able to find out the answer then. Gross profit is. This type of questions will be there in your exam. So you can come to know that how the questions can be formed in MCQ format. One by one. Revision. Gross profit is. Now I told you for calculating gross profit, we have to make trading account. But as well as I have given you the formula of gross profit also. So here the gross profit is, see the answer B. Answer B, excess of sales over cost of goods sold. I gave you one formula. Gross profit is equals to sale minus cost. By the help of this formula, you can calculate anything which is missing here. So here sales minus cost of goods sold will be gross profit. Or in simple words, excess of sales over cost of goods sold will be termed as gross profit. Or if you want to find out the gross profit, you can use this formula, that sales minus cost of goods sold. Now turn this formula. If you want to calculate S, then formula is COGS plus GP. And if you want to know COGS, cost of goods sold, the formula is sales minus GP. Okay, so with the help of one formula, we can calculate 3 things. Now, next question. Got it? So, gross profit is the difference between sales and cost of goods sold, or in simple words, we can say excess of sales over cost of goods sold is known as gross profit. And how to calculate sales? With the help of same formula, we just transpose it. Okay, so COGS plus GP. Now, if you want to know the COGS, then the formula is sales minus GP. If we subtract gross profit from the sales, we can come to know the amount of cost of goods sold or cost price. Now, next, net profit is computed in. Net profit. As when we prepare trading and P&L account, at that time I told you, if we want to know the gross profit, we have to make trading account. And if we want to know about the net profit, we have to make, very good, profit and loss account. So net profit is computed in the profit and loss account. See, trial balance will not show any profit. Trading account is prepared for calculating gross profit or gross loss. Balance sheet shows financial position, assets and liabilities. So profit and loss account is prepared to know the net results, net profit or net loss. Now next question. In order to find out the value of the closing stock during the end of the financial year, we do this by stock taking, deduct the cost from sales, deduct opening stock from the cost of goods sold, look in the stock account. Yes, please. Where to show it? Please. If we want to know the value of closing stock during the end of the financial year, what is the remaining stock in the godown? So the formula is cost of goods sold minus opening stock. That is the formula of calculating closing stock. Answer C. See, I am showing you both the ways. Maybe the formula method, maybe the language statement form. Okay. Now fourth question. At the balance sheet date, the balance on the accumulated provision for depreciation account is. Accumulated provision for depreciation means the depreciation charge. Do you know the meaning of depreciation? That is chapter 7 also. Yes. Depreciation means reduction in the value of fixed asset. When the fixed asset's value is going down, yes, that is termed as fixed asset depreciation. Land and building, plant, machinery, furniture, vehicle, all fixed assets are depreciated. Reduction in the value of fixed asset may be by using it, by passage of time, by outdated method. The value of asset is going down. Okay, that is termed as depreciation. Depreciation is the loss for business. So that is deducted from the value of asset. Just now I told you that the value of asset is going down, decreasing. This is termed as depreciation. Or it can be shown in the liability side of the balance sheet. Liability side of the balance sheet, because it can be deducted in the asset side or it can be shown on the liability side. The ultimate effect will be same. Okay. Now, which of the following statements are true? True. Financial statements are only interim report. Financial statements are also known as annual reports. Financial statements are historic. Answer both B and C. See, financial statements are not only interim report, that is used by the outsiders also. Various external users are there. Do you know about the external users? Yes, investors, public, common public, customers, government, various external users are there. Even the government imposed tax on the basis of financial statements. So, true statement is only B and C, that is annual records, because the financial statements are known as final accounts, which is prepared at the end of the financial year, and they are historic in nature because these are based on the previous analysis. So, both B and C. Okay. Now, see. Financial statements are prepared at the end of the year to know the profitability. Okay, and so answer is C. Now, next, very good question we can say. See, operating profit equals to. While I was teaching you operating profit, that time I told you there is another term for that. One is there. Another term is EBIT, earning before interest and tax. Got it? So, earning before interest and tax or operating profit is equal to. See the formulas, 4 formulas are given. Yes, C is correct. Net profit plus NOE minus NOI. Again, Net profit, which is calculated with the help of profit and loss account. Yes. NOE, non-operating expenses, means those expenses which are not related with the operation of the business. And non-operating income means the income which is non-operating. Non-operating means not related with the routine. Okay, that's why it is non-operating income. Okay, I am giving you the example. Non-operating income means if I sold my land and get the benefit or the profit, that is non-operating income. Clear? Okay. Non-operating expenses are those expenses which are not related with the routine expenditure, which are not related with the operation of the business. First of all, what are the operating expenses? Those expenses which are related with the operation, salary, paid to employees, electricity bill, okay, repair, maintenance charges, postage, stationery, good, repair, very good, advertisement, rent pay, interest pay, discount pay, means those expenses which are related with the operation of the business are termed as operating expenses. Then what are non-operating expenses which are not related with the operation or operating activities of the business? Yes, like loss on sale of fixed asset. That is non-operating. Okay? Means which are not related with the routine work. So the answer is C. Now see, next question. Balance and input IGST account is shown. Asset side, liability side, expenses, income. See, when I told you, explained you GST, that time I told you that is one is IGST, another is CGST and SGST. Do you know about these? I'm sure you must know about. IGST, Interstate Goods and Service Tax, and CGST, Central Goods and Service Tax, SGST, State Goods and Service Tax. Very good. So balance in input. Be careful, that is given input. Now input will be shown on the asset side of the balance sheet. Clear? Then we have to show output. Output will be shown at the liability side. Please note down. Input GST will be shown at asset side. Okay. Output GST will be shown at the liability side of balance sheet. This is the major difference. See, IGST or GST, here you know the difference between IGST, CGST and SGST. In subsidiary books also I taught you this topic. Interstate Goods and Service Tax, Central Goods and Service Tax, State Goods and Service Tax. These are the different terms used according to the conditions. So input will be shown at the asset side of balance sheet and balance in output IGST or GST is shown balance in liability side of balance sheet. Now the next topic. Whether the following expenditures are capital, revenue or deferred revenue, and mention their amounts also. See, first of all, okay, I will tell you. Capital means those items which are for large amount for long time period which creates any asset. Revenue means recurring or repeating for operating expenses. Deferred revenue means those expenses which will give the benefits for long time period. Now see, purchase machinery for rupees 10 lakh, spend rupees 30,000 for installation and 20,000 for cartridge machinery purchase, means that is capital expenses. Because see, be careful, non-recurring and non-repeating expenditures generally related with the asset. Okay, so these are termed as asset. Assets will be capital expenses. Then machinery purchase for rupees 10 lakh. Amount is payable in 5 years installment. 5 years installments of rupees 2,10,000 each. Here the machinery's value is 10 lakh rupees, but the amount is payable in 5 years installment 2,10,000, but the machinery is an asset, non-recurring, non-repeating, that's why it is capital expenses. Now rupees 9 lakh spent on advertisement of a new product. See the amount paid or spent on advertisement which is for advertisement of a new product, that will be beneficial for many years, because when the new product is launched, that time many expenditures are there initially that will give the benefit for more years. That's why it is deferred revenue expenditure. Okay, now see. Repair and whitewash of the office of rupees 3 lakh. Repair and whitewash is recurring expenses. Every year that occurs. After few days that will again occurs. Okay, so after few months also we can say. So those expenses which are recurring and repeating, which are neither creating any asset, will be revenue expenses. Okay, so repair and whitewash is not creating any asset, that's why it is revenue expenses. Install fire safety system. Fire safety system will give the benefits for many years. It is creating asset, that's why it is capital. Now legal charges of rupees 10,000 paid for registration of the building in the name of the owner. See, legal charges essential to acquire ownership right. So rupees 10,000 is capital expenditure. Why this is capital expenditure, I want to ask you. This is the question I am telling you. See, okay, first discuss. Purchase of asset is capital expenditure. Clear? Just now I told you that the asset purchase will be treated as, this is non-recurring, non-repeating, that's why it is capital expenditure. Then capital expenditure of rupees 10 lakh, but the interest paid will be treated as revenue, because interest we will paid annually, repeatedly. Then the benefit of it will receive in many years, that's why it is deferred revenue expenditure. Now, repair and whitewash is routine activity of maintenance. It's a revenue expenditure. But the fire system is a capital expenditure, because that will give the benefit for many years. Okay. Now, legal fees spent is essential to acquire ownership right. So, rupees 10,000 is capital expenditure. See, when we spend amount for purchasing any asset, that will be capital expenditure. Any vehicle, see if you bought a car and you put a music system in it, some extra additional accessories in it, that will be included in the value of car, that is capital expenses. But if you are spending amount for petrol, repair, cleaning, washing, okay, driver's salary, all are revenue. So my dear students, what I want to say you in this chapter, that all the expenses which are recurring, repeating and for maintenance, these are revenue, and all those expenditures which will create some asset for long time period, benefit will give the benefit for many years, and non-recurring and repeating. Do you think that anyone can buy the cars daily? And the aim is not to resave, these are capital expenditure. Or a very simple difference which I want to give you. Those things which we show in the balance sheet will be capital expenditure. And those things which we show in trading account and profit and loss account and helpful in calculating gross profit, gross loss, net profit, net loss, these all are treated as revenue. Clear? Got it? So these are also the examples for true and false, but the similar terms we can, I can say that will come, like I want to show you how the multiple choice questions will come, whether true or false will be there. So these type of questions will come in your exam for so we have to prepare these also, because this chapter is completely numerical, but we can form theory part or MCQs from this also. See, it's very easy. Trading and P&L account, opening dash appear on the debit side. What opening? Stock. In the trading account, debit side we show opening stock, credit side we show closing stock. Okay. If the total of credit side is more than debit side, it is termed as net profit. Okay, so these are the questions which we can say true or false will come. If credit side is more than debit side, the profit is net profit. That question may come in the form of fill in the blank also. Okay, I'm sure you all will be able to do these type of questions.